Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Well, you know what? I've interviewed a lot of people on this podcast over the years. I've interviewed people that have got 5 years of real estate investing experience, 10, 15, 20 years of real estate investing experience. But I don't think I've ever interviewed anyone with as much experience as today's guest. Luis Belmonte is zooming in from beautiful San Francisco, California. Luis has been in the real estate game, I believe, for 57 years, if I'm not mistaken.
That is correct.
He's done a lot. In fact, he's one of the 10 original founders of what is today the largest REIT that exists on the New York Stock Exchange. So, Mr. Belmonte, welcome to the show. Great to have you.
Great to be here.
So, Luis, tell us a little bit, and it's 57 years of experience is a long time to go through, but can you kind of tell us how you got involved in real estate and what that career trajectory has taken you along?
Well, it was a total accident. I got out of Vietnam in the end of 1967 and got a flat in San Francisco with a high school friend of mine and got a corporate job. And my friend who had inherited some money met some fool in a saloon who talked him into putting money in a rehab of a 2-flat building in the Richmond district of San Francisco. And things weren't going well. Work wasn't getting done. And my flatmate was afraid he was going to lose his money. And I said, well, the job I got is boring and the pay is piss poor. So if you pay me $3 an hour, I'll strap on my tool belt and we'll get this job finished up and get the building sold and get your money back. And I had some experience because my father, who was a civil servant, dabbled in rental real estate and cattle raising. He had owned a dairy farm in 1929 when the bank closed and bankrupted him. And so he went back to college and got a government job, which he kept all his life, but he was a natural born entrepreneur. And so we were doing things all the time, and I was his gopher and tax preparer, and we owned a ranch. So if you're a rancher, you don't call a tradesman when something goes wrong because nobody's going to come. So
Yeah.
I knew how to pound nails and string wire, and so we went and redid this thing and sold it, and then he and I went into business together. And did a few deals until such time as I got married and my wife was with child and I had to go back to the world of salaried employees. And I ended up working for a developer out of New York City who built warehouse buildings.
Okay.
And I spent 35 years building, buying, selling, managing, financing warehouses. So at one point, I was one of the biggest warehouse developers in the United States. And then when, after 1986, when everything blew up, I ended up going to the other side of the table and working for an institutional realty advisor. And we were investing money on behalf of pension funds and university endowments, but I was the industrial guy. And then we did a roll up and went public, and I ran their development program until I retired at the ripe old age of 64 and started my current company, Seven Hills Properties.
Wow, fascinating. That couple of things. So you got indirect experience with the Great Depression, 1929, which is
the only fully true thing that Donald Trump ever said was discussing the impact of the '86 Tax Act, and he referred to it as going through the windshield. And that's precisely what happened. It upended the entire business model of the commercial development business overnight. And everybody in the country who was in the business was broke, whether they knew it or not.
Yeah. And then fast forward to I think you said 67 when you started in real estate. So everybody else is having fun in San Francisco with the summer of love.
Yes.
And you're swinging
Well,
Swinging hammers.
and I left the country in 1964 and said goodbye to all my drunken friends, and I came back at the end of '67, and they were all taking LSD
Oh,
and
gee.
peyote and and going on rent strikes in the Haight-Ashbury. And I actually, when I started buying apartment buildings, I was buying buildings in the Haight because the widows who inherited them were frightened to go collect the rent. And
Yeah.
so I got some really good little buildings in the Haight during that heyday. But yes, things had changed from '64 to '67. The world underwent a change,
Yes.
and the epicenter was on the corner of Haight and Ashbury. And I actually own a 3-unit building about 4 blocks from there.
Oh, that is amazing. So, Louis, you mentioned until you started your current company. Tell me a little bit about what you do these days, or what you've been doing for the
What
last.
we do these days is when I retired from corporate life, I had been running a development business. So when I first went to work for the predecessor of Prologis, they were an advisor, and they hired me to be their pet developer. So I started a little development company, and then as they acquired more assets, they needed my services as a fixer. So when institutions sell each other property, they always throw some dogs in the portfolio. And
Right.
so I became the highly exalted executive vice president in charge of every screwed up deal in the United States. And so my kind of my little development company was didn't have my time, so I partnered up with a friend of mine, and we put up the money, and he did the deals. And so I had a little sideline business in development, and basically we were building drugstores for Walgreens. And and then when we went public, my partner said to me, we got to fold up this company because it's a footnote on the SEC filings." And I said, "I understand that, but we got a whole bunch of deals that have future phases, and it's not fair to our partner, and it's going to be a bloodbath if we close it up precipitously. So let me work these things out, and I'll get it done over the course of a year or two." And then it was decided that I was too old to be an international road warrior because I was doing deals in Japan and Singapore and
Wow.
Mexico and Europe, and the jet lag gets real old at that stage. So I
Yeah.
said, "You're right. Would you like me to clean out my desk now or later?" And I resurrected the little Walgreens company that we had, and my partner and I ended up building 30 drugstores for Walgreens and building them and selling them. Well, we sold 28 and a half of them. We should have sold all 30, but anyway, the that was what built our balance sheet. And so then our business, since then, we've built 2 large low-income housing projects. So we got 502 units of low-income housing, and we have 11 little neighborhood retail deals in small towns. So those are two
Whereabouts in
products.
California? In
Uh,
California?
our retail is mostly in Oregon, and
Okay.
that was again a total accident. We built a lot of Walgreens deals in Oregon because the Walgreens guy who ran Oregon and Washington is someone we got along with, and his father was a big poobah at Walgreens, and he got deals through committee. So those are the deals we ended up doing because, as usual, the other gutter rat and I were looking for the path of least resistance. So that's where the deals were. So we ended up with a lot of land free and clear in Oregon because when we sold off the Walgreens, we kept the rest of the site
Mm,
and paid the debt off and took part of our profit in free land.
nice. Very, very smart. So, and the low income housing that you're working on these days, or that you've developed, did you sell that? Did you hold on to it? What has
Well,
happened?
you gotta hold on to it. You gotta perfect the tax credit. So you
Yeah.
get into a low income deal. I mean, it's brain damage in the extreme, but it requires no front end capital, or it's a little front end capital, but you get it back when you close. So if you're poor folks, then low income housing, if you can go through the brain damage, is a way to build up a lot of product with very little front end money and very little risk because the things rent themselves. So
Mhm.
and so what our MO was as a development company is bringing big league experience to small time deals. And
Hmm.
and so most low income housing developers are nonprofits, and they're not really very good at it. So
Yeah.
we're a for-profit non low income housing developer, and we did some very sophisticated deals in San Francisco. We required a general plan change, legislation at the Board of Supervisors to get us exceptions on setbacks and air and light, buying land from the redevelopment agency. I mean, all kinds of hairy stuff.
That's the brain damage you're telling
And
me about, is
in
it?
San Jose, we're partners with the housing department of the city of San Jose. We went through in the middle of the job, the housing department came at us with some absolute nonsense. We had to shut the job down, go to arbitration. The small time operators can't do stuff like that, but it wasn't my first rodeo.
Yeah.
So that's why we picked those two things. And now, having done that, we've built a balance sheet, so we don't need outside capital. So when we do a deal, it's our own money that's the equity.
Nice, nice, nice. I like that. A for-profit, low-income housing development.
And as a result of that, we take much better care of our property than the nonprofits do. I
I
mean,
bet. Yeah.
Our our place in San Francisco is almost 30 years old. It's clean as a whistle. You'd be happy to live there. It's safe. It's clean. It's secure. In San Jose, we compete with garden apartments all over town. Ours is good. All we lack is a swimming pool, but and
Nice.
a clubhouse. But our units are look as good and have as many amenities as anybody in town.
Very nice. So, Lewis, you've got 57 years of experience. I know we were talking a little bit off camera. You've put some of that wisdom into books. So
Yes.
tell me a little bit about a few of the books that you've written over the years.
Well, the first book I wrote, which I won't recommend because I got better at it, was Get Rich Slowly, Invest in Real Estate. And that is kind of a summary. This ain't a
Yeah.
get rich quick scheme unless you use excessive leverage, which means you're going in the toilet sooner or later.
Yeah.
My second pass at it is called Real Estate 101, where I talk about all kinds of real estate except single family and resort, and go through kind of what the basics of the product type are all about, and also financing, inflation protection, just kind of a general a 101 course for someone interested in getting into the commercial real estate business. Probably the most beneficial book other than that is called Street Dog MBA. I've written a series of books with the street dog theme, and it's about stuff that happened and what I learned. Most of it's stuff that got screwed up and what I learned, but some of it is stuff where I got lucky or I outthought the market for a change, and but drawing the lesson, and the basic lesson is you need to manage your business for recessions, not good times. So you need
Yeah.
to think through every deal you do and say, what happens if? What happens if interest rates go up? What happens if the market goes soft? What happens if there's excess supply? What happens if there's a capital strike? What am I going to do? And so, as an example, about 4 years ago, I said to my partner, we got to refinance everything in the system because these interest rates aren't going to last forever. And,
Yeah.
I remember when the prime rate was 20, I remember fixing $100 million of loans at 10% because we never thought we'd see single digit interest rates again. This nonsense ain't going to go on. So we spent 2.5 years beating on every loan in our system to get 10-year fixed. And so now we're 200 basis points under what's going on in the market because of all the scars on my body. So that's the kind of thing I'm trying to convey in these books is manage for recessions.
Well, yeah, that's comes from years and years of hard-earned experience, that's for sure.
Yes.
So, Lewis, it doesn't sound like you're slowing down anytime soon. What's on the horizon for you real estate wise?
We're out looking for distressed deals, of which there are. We haven't done any office deals because I hate office. I mean, the tenant improvements just beat your brains out. Every time I've touched an office, I haven't made any money. Uh, but other than that, we're looking for smaller deals, and even though I've done deals up to $100 million. I love smaller deals because if you're doing $100 million deal, you own 1%. If I'm doing a $5 million deal, I own 40%, and my other two partners own 60%. We own the deal. We don't report to anybody. We don't write any asset management reports. We don't get on quarterly calls. It's just ours to do with as we see fit. So that's the kind of things, and we're looking for a neighborhood retail in second and third tier markets because there's very little competition there, and because the replacement cost is probably two to three x what we're paying for the buildings, and they're multi-tenant, so one bankruptcy isn't going to create a whole lot of grief for us, that kind of thing. So, and my partner is now 64, so he's starting to draw back a little bit, and we're coasting, but we're still out looking.
Yes. So if people want to get a hold of one or two of your books, how should they do that?
You look on Amazon, and they're cheap. It's paperback, Kindle, or Audible. I apologize for the quality of Audible. It's my voice, but AI didn't do a very good job with my voice. It's way too flat. It lost all of its enthusiasm in the translation, but it's the best I could do, aside from sitting in a studio for endless hours. But anyway, they're cheap. Hopefully there's some giggles in there that you get, and hopefully you'll take out a lesson or two that will help you avoid a problem that I had.
Well said. Mr. Luis Belmonte, thank you very much for being on the show. This has been great.
Thanks for having me.
All right, everybody. Thanks for tuning in, and we'll see you again on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.